Hey, if you've been asked to produce a balance sheet for your rental property business or maybe your Airbnb business, then you've come to the right place. We have created a balance sheet template built specifically for rental property or Airbnb businesses. I'm going to walk you through how to use this template. And also, the template is free to download, and you can download that by going to the link in the description of the video below and then follow along as we walk through it. But first of all, my name is Adam Hoeksema. I'm the co-founder of ProjectionHub, and over the last decade, we've helped about 50,000 entrepreneurs create financial projections for various potential investors and lenders as they're getting their business off the ground. And so if you do need a full set of projections, we also have a number of financial projection templates, including templates specifically for rental property businesses and one specifically for Airbnb businesses. So I'll link to those in the description of the video below as well, and you can go grab those as well. So with that, let's dive in. Okay, so one of the things that we did with our balance sheet template and what we've noticed with others is that a lot of times they just have the balance sheet template, and they will have the different categories like cash and accounts receivable, and then just a slot for you to put a number in there. And they don't give you really any context or tell you what is supposed to go in there or what's not supposed to go in there. And so what we did is we kind of broke this template up into two pieces. So we've got this first tab is our input tab, where we ask a number of questions in plain English to try to help you know what to put in that field. And then from your answers, we're going to go ahead and produce the balance sheet on the next tab. And so you'll have kind of the deliverable at that point. So with that, I'm going to dive in here. We want to fill out all of the answers to all of these questions. So how much cash do we have in company bank accounts? Let's say we've got $10,000. We've got how much do our customers currently owe us? Maybe we've got one person that's behind on rent, so $1,500. How much did you pay for the inventory that you currently have on hand? So in this example, let's say it's an Airbnb and maybe you have some consumables like some food that you buy in bulk for your different units, and you know, maybe paper towel and toilet paper and that sort of thing that you're buying in bulk and you have an inventory. So maybe we've got $500 worth of inventory. And what dollar amount of expenses have you paid for up front that you haven't used yet? So this could be deposits on utilities, for example, might be a good example in your situation. But for this case, I think we're just going to leave this at 0. Do you have any other assets that you could sell for cash? So this would be stocks or bonds that you could easily sell in the next 12 months. We'll leave that at 0 as well. All right, so fixed assets. Do you have any machinery or equipment? Well, let's say no machinery or equipment that the business owns. Furniture or fixtures. Okay, maybe you have a couple properties and you furnish them. So maybe you own $20,000 worth of furniture. How much do you pay for improvements to a space that you're leasing? So this is probably going to be 0 in this case, unless maybe you are leasing an Airbnb or leasing a unit, and then you are renting that out to Airbnb tenants. But I think in most cases, you'll probably own the property yourself, and so we'll leave this at 0. Now, how much do you pay for land and buildings that you currently own? So this would be the rental properties or the Airbnb units. Let's say we've got 2 of them, and in total, they add up to $500,000. And actually, I should have looked one line farther. This, I guess, is really a line for like if you own an office building or maybe raw land that you plan to build on in the future. So we're going to leave that at 0. And then here we have how much did you pay for the homes, condos, etc. that you currently own and rent out to tenants. So this is where we want to put that $500,000. And then what dollar amount have your assets depreciated since you purchased them? If you don't know what your depreciation amount should be, 1, you might need to talk to an accountant. 2, you can learn more about depreciation calculations here. But let's just say we know that our property is depreciated by $50,000. Maybe that's what we looked at our last tax return and we saw that that's what we had listed. So put that in there. Intangible assets, patents, trademarks, copyrights, probably not going to have anything. So leave that at 0. Customer deposits. Now you might hold customer deposits for rental property. So let's say we're holding 2 months rent for 2 different customers. Not 60,000, how about 6,000? And then goodwill, probably going to be 0 again for this as well. And we don't have any other assets. So there's your assets. Now jumping to liabilities. What do we owe suppliers, vendors, contractors? Maybe $5,000. Do we have any unpaid taxes? No. Short-term loans, so maybe credit cards. Say we owe $4,000 on a credit card. And then this would be how much you have to pay in the next 12 months on any longer-term loans. So this would be if you have a mortgage on those 2 properties, what is the principal amount that you're going to have to pay on those mortgages over the next 12 months. That's what you want to put in here. And let's just say that's going to be $15,000. And we're going to leave this at 0. All right, and long-term debt. So this is where we would have our mortgage, perhaps, for these property rentals. So let's say we had two assets, two buildings worth $500,000. Let's say we've got $400,000 worth of mortgage debt on them. And then lastly here, how much have we invested into the business? Say we put in maybe $100,000 to get started, to be able to buy the two properties and get started. And then lastly, what is the retained earnings? So this is the cumulative profit of the business. If you have been doing your bookkeeping, or you might be able to talk to your tax accountant about what is the retained earnings of business. If you don't know, then this should be what is the profit that you have made each year. So you should go back to your previous years and add up all the cumulative profit or loss that you've had in all your previous years. So let's say we made $10,000 profit total. Maybe we've been doing this just for a year. And then so far this year, we've made $5,000 profit. All right, so that's all the answers. Now, it says moment of truth. Let's see if it balances. I can almost assure you it will not balance. And that's kind of the point of this video, is that filling out a balance sheet is tricky. It often doesn't balance. I'm going to show you here. So it filled everything out based on what we entered, and we come down to the bottom and, oh, it does not balance. So there is a link to a video here. If you get this message that your balance sheet does not balance, watch this video. I'm not going to go into it in detail here, but there are some different things, some tips on troubleshooting and why your balance sheet might not balance. But at the end of the day, a balance sheet, the assets, total assets, should equal or must equal your total liabilities and equity. And so right here, we've got $488,000 in total assets and $524,000 in total liabilities and equity. And if those are not balanced perfectly, then the balance sheet isn't balanced. And so a lot of times what people end up doing is they take the retained earnings and use that as like a plug number, and just make retained earnings whatever it needs to be in order to get the balance sheet to balance. That may be what you end up doing. But watch the tips in the video to figure out why your balance sheet's not balancing. Hopefully that will be helpful. If you have any questions, don't hesitate to reach out to us at support@projectionhub.com, or leave a comment in the video comment section below, and we'll try to help out. All right, thanks.